Hello, ladies and gentlemen. Good morning from this part of the world and weekend. And during the course of the week, we've had some interesting situation across the asset we are monitoring. Remember, we have been monitoring three financial instruments, which includes the US All Spot, the USDJPY, and of course the XAUUSD. And the gold has been holding near its record high for the last 3 days, going through a consolidation. And of course, you know how that works. I talked about this on Monday that whenever price action hits an all-time high, there is a high tendency for majority who are part of that move to the upside out of fear want to take in some profit from the chart, and this usually leads into consolidation, retracement, and choppy market condition, which has been the character of the market since the beginning for the last 3-4 days. And then we also have, besides the choppy market condition, the market has been looking a little bit positive, fueled by the US-China trade tension and expectations of the Fed's interest rate cut as well. While on the other part, the USDJPY continues to react to Japan's rising real wages, narrowing the rate differential between the US dollar and the JPY, favoring the Japanese yen significantly, as we saw the USDJPY is falling to the downside. So today we are going to be looking at that asset too as well to see if the downtrend still persists, or are there any chances that market participants will want to be taking some profit, which could lead to buying opportunities on the USDJPY. Meanwhile, oil still remains under pressure after Trump reaffirmed plans to boost U.S. production, though supply risk from Iran and Russia is still there. So we will look into that market, break it down from both technical and fundamental perspective to have a well-informed trading decisions for today. So if you're a fan of any of these assets we are talking about, that is the US All Spot, the USDJPY, and the XAUUSD, stay tuned in. You do not want to miss out on the valuable ideas we will be deliberating on today. So it's a crucial day. We are going to be breaking down the chart, assess the setups, and position ourselves smartly for the moves ahead. And for those who are joining us for the first time, you're highly welcome on board. Very excited to have you around with us this morning. This is the Forex Morning Mastery. My own name is Sheriff Daramola, and we run this 3 times in a week, Mondays, Wednesdays, and Fridays, where we all come together to have a deeper understanding into the behavioral patterns of market participants within the market environment of the assets we are monitoring. So you're highly welcome on board, and I do encourage you to actively engage in the comment section. And do not forget to give that video a thumbs up. It goes a long way in supporting this channel, and of course it inspires me to continue to do more. And thank you guys for your support. So with that said, here we will be diving right into the business. And as always, the first asset we are going to be, as always, the first thing we normally do is to dive into the economic calendar, where we intend to look at the major event that has been influencing the sentiment in the market so far this week, and of course what we are going to be looking at as we prepare for the final trading day for the week. So on the economic calendar, based on the asset we're monitoring so far this week, we've been focusing on economic features from both the United States and the Japanese economic docket. This week is more or less absent of major event from Japan, so we have been focusing on the US economy as it has become the major driver of the USDJPY that we are monitoring. So on Monday, we saw the highest manufacturing PMI, where the data started the new year on a positive note. We saw the actual figure coming in higher than the market had expected, higher than the previous month, and this is the first time in about 6 to 7 months that the ISM manufacturing PMI will hit above the 50 mark, which is a very positive signal showing that the manufacturing sector in the United States is recovering at this point in time. Very good news from the United States we have there. Then on Wednesday, we looked at the labor-oriented data, that is the ADP employment change, one of these data that could set the tone for the NFP report during the which is going to be happening today, of course. And for those who do not know, the ADP is a report that provides a number of new jobs that was added in the United States private sector in the last 30 days, in the last 1 month. And of course, look at what happened here. We had an actual data that came in at 183,000, way higher than what market participants were expecting, and of course way higher than the previous month data, which was pegged at 176,000. Another positive news from the United States economic docket. Then on that same day, we also saw the ISM Services PMI, a data that gives us an insight into how well the service sector is performing. And of course, though the data came in below what market were expecting at 52.8, but it still remains above the 50 mark, which still shows that the sector, the service sector of the United States is still looking promising at this point. So at the end of yesterday, all the data coming in from the United States has been looking very rosy, and we might likely be seeing a very hopeful atmosphere ahead of the NFP today. So today, Friday, February 7th, we are looking ahead to two high impactful events for today. We have the average hourly earnings. So this event here will be coming in simultaneously at 1:30 p.m. UTC. That's about 2:30 p.m. local time. So we are looking at the average hourly earnings, a data that measures the change in pay for workers in the United States, and it's also considered to be a key indicator of inflation. And from what we can see here, there is a projection that the data will be coming in just like the previous month at 0.3%. That is for the month on month, and for the year on year coming in a little bit lower than the previous month at 3.8%. So if the data comes in here higher than what market are looking at expecting, we are likely going to see a positive traction in the favor of the US dollar. Then finally, the most important event is the NFP, which is coming up same time too as well. This data here shows us how many jobs were added or lost in the United States economy in total, and of course it excludes the farming sector. Now, from what we are seeing here, economists are projecting that the data will be way lower than the previous month at 170,000. Remember, the previous month came in at 256,000 as the United States economy closed the 2024 year on a strong note. So we look forward to see what the data will look like, but I have a strong feeling that the data is likely going to come in higher than the previous month data, especially after considering the ADP employment change, which shows a very wide margin compared to what market were looking forward to. So these are the major events we are looking forward to, and of course there is a high tendency that this will be bringing in some liquidity into the market, and of course we want to be positioning ourselves strategically to take advantage of this opportunity when they finally happen. So with that said, let's dive right into the charts, and the first thing we want to be looking at is the US oil spot commodity. And on the US oil spot, we've had some very beautiful situation since the beginning of the week, though we had had buying intentions at the beginning of the week, but when the market dictates, we have no other choice than to listen. And of course, when price broke down that critical support line of that range bound structure had the $73 area at the beginning of the week, we had no other choice than to look out for selling ideas. Now, let me quickly rewind to the beginning of the week and what was the thing that we were looking at to navigate this market. So at the beginning of the week started on a very bullish note actually, where we saw price started around the $73 area, confined within a range bound structure for about 10 to 12 hours. That is the $74.50 level and the $73 area. And of course, within this whole structure, we were looking forward to price breaking out of the $73.50 level to give us buying ideas, which actually did, but we saw price break back down, taking us out of that buy position at break even. And with the breakdown of the support line at the $73 area, we were mature to continue the downtrend move. The market came back to retest structure on Tuesday, and during our live session on Wednesday, I told us that we will be continuing the downtrend move, and look at what happened. I was taken out of this of the sell position, I think around the $70.35 level, with about 150 pips on that one. And for those of you who capitalize on that, well done and kudos to you. And ever since price tested that $70.25 area, somewhere around here, this has been consistent since the beginning of the week, on Tuesday to be precise. We've seen here that despite the strong bearish momentum that started this week, as soon as price tested that $70.50 area, we noticed that sellers were finding it difficult to continue that downtrend move. And the same thing also happened yesterday. We saw price drop into the structure, and it was difficult for them to break through that area, making that area a beautiful support line to work with ahead of this week. Now, let's understand why the market is doing this at this point. Why is the $70.50 area becoming a support line, negating all attempt by the sellers to break through that particular area? Well, first of all, the supply risk from US sanctions on Iran, that is Trump's renewed push to eliminate Iran's oil export, could remove over, or let me say up to 1.5 million barrels per day from the international, or let me say the global market, which has a tendency of creating potential supply shortage in the market. And of course, this could be an opportunity for investors to start stocking the US crude oil commodity in preparation for this potential sanction on Iran. Then secondly, in Saudi Arabia, there is this company, Saudi Aramco, one of the major oil companies in Saudi Arabia, suddenly increased oil prices this week due to rising demand from China and India. Remember, there was sanction. China, India were the major buyers of Russian crude oil, but since the sanction on Russian crude oil happened last month, they've shifted their scope to Saudi Arabia, and due to this increase in demand, they had no other choice than to increase prices. You know, our simple economics: when demand rises, of course, price is going to rise, and this is signaling stronger buying interest and could support oil prices. And for me, it could be one of the major reasons why we are seeing that this area between the $70.50 area is becoming difficult for sellers to break through. Then to add to this is the hopes for US-China trade talks. While tariff still remains, Trump and the president of China are expected to discuss tariff rollbacks, which could ease demand concern and provide relief to oil prices. So we cannot take that one out of the case. And then, in as much as the potential is looking bullish here after identifying a support zone around the $70.50 area. The surging US crude oil inventory, according to the API and the EIA report, we saw an increased weekly stockpile, which is a sign that the supply in the US market is higher than the demand. So, for instance, the crude oil stockpile for is it the EIA or the API report? I'm not sure which that is. We saw a rise of 8.664 million barrels, the largest weekly increase in nearly a year, far exceeding all market expectations. And this, for me, signals weak demand and precious oil prices. And the path of least resistance since the beginning of the week has been bearish. We cannot ignore the potential that sellers could still continue that momentum to the downside. Now, with this scenario in place and with all of this, how has the market been digesting this information so far? Well, if we look at the structures here, we have a clearer picture of what the sentiment in the market is saying right now. And just with just looking at it from afar, it is quite clear that we have a demand zone. Of course, we have it right here. I want to take between the $70.75 and this area. So let me just mark it out as my demand zone going into the end of the week. So we have a demand zone to work with here. So we have that area between the $70.75 and the $70.25 area as my demand zone going into the end of the week. And as long as price remains above the structure, I want to maintain a bullish bias on the crude oil market. You might likely be seeing a recovery at this point. Then, in addition to this demand zone, is the structural descending trend line we have here. And look at how beautifully this descending trend line had maintained the bearish momentum. So as soon as price gets into the structure, we saw how sellers negate all buying attempts to break out of that level, pushing price to the downside. However, a couple of hours ago, we saw price finally breaking out of that descending trend line for the first time this week, which for me is a good signal that buyers may likely be taking advantage of this this sanction that we talked about earlier, and of course the rising demand from China and India, which has led Saudi Aramco to increase crude oil prices, is gradually taking an effect in the market, as we can see here. And from a technical standpoint, whenever price breaks out of a key structure like this, it's a sign that buyers may likely be taking charge anytime soon. And with this case scenario here, I already placed a buy stop order above the $70.85 area. And if you look at the trading panel at the bottom of your screen, you will see that I have a US oil trade open at this point, which is currently running with about 13 pips in profit. And if you in any way had missed out on that opportunity, it's okay. There is still the likelihood of price coming back to retest the structure in an attempt to continue that uptrend move. So if that is going to be the case, we could be in to have a sell stop order anywhere between the $70.85 level and of course this descending trend line to capitalize on this uptrend move. So I personally have placed my TP target for the buy around the $72 area. That's about 115 pips. I just placed it there at the 72, which was our key level for this week. So let's see how the market is going to play out from this particular area. However, if this whole breakout scenario here turns out to be a false one, where sellers still take advantage and then push price to the downside, the only condition that will make me join and sell here is to see this demand zone broken to the downside. So I want to see price take out all the buy positions here, which of course will reflect on the chart as a breakdown retest of structure for me to be convinced to join a bearish move to the downside. So that's the only condition that will make me sell. But if price still remains above that demand zone, I will continue to look out for structural details that will support buying ideas. Now, let me also talk about the implication of the NFP on the crude oil. Remember, the US crude oil is a US dollar denominated asset, and whatever happens to the US dollar has a significant effect on this particular commodity. So if the NFP comes in higher than what market had expected, it will increase the value of the US dollar, making the crude oil commodity very expensive for other currencies to buy. And of course, this will affect the demand in the market. So it could incite a strong tone to the downside. But if the NFP report comes in lower than expected, it will devalue the US dollar, making the US crude oil very cheap for other currencies to buy. And of course, the implication of this on the market is there will be increased demand as investors take advantage of that cheaper US dollar. So this is my simple view to the US crude oil commodity today. So we have a simple structure where we are looking to buy the breakout retest of this descendant trend line at the $70.85 level, or look out for selling ideas at the breakdown retest of the $70.25 area. So that is my simple view on the US oil spot today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds maybe off to see if there are any questions before we move on to the next asset on our watch list. And while we take a break, kindly click on that like button. Let's make the number of likes tally with the number of people on board, and thank you very much as you do so. See you soon. All right, so in the absence of no questions, I want to take that as a confirmation that we are all on the same page. Mark out the structures accordingly on your chart. They will be playing a significant role in helping us navigate this market today. So I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, and what a wonderful week we've had here on this particular asset. Remember, we have been selling the USDJPY since the beginning of the week thanks to the hawkish Bank of Japan policy outlook, Japan's rise in real wages, and of course Japan's 10-year bond yield has continued to rise following this positive development from the Japanese economic docket. And of course, this has made Japanese yes take advantage of the struggling US dollar amidst subdued prices of the dollar at this particular point in time. Now, let's rewind back to the beginning of the week and let's look at what we were actually looking at prior to the beginning of the week. Now, the first thing we noticed here on the 4 hours time frame is the fact that in the last 3 to 4 weeks, the market has been on a strong bearish note. And as a result of this, we had this beautiful descending trend line after connecting the series of lower highs. Now, our key level for this week was duly situated at the 155.00 area, a level which was for about 2 to 3 weeks serving as a demand zone. And of course, we were looking at the fact that since price is trading around that descending trend line during the first couple of days of the week, we could see price drop to the downside. And after monitoring the character of price action for the first half of the first day of the trading week, we were able to spot a range bound structure where price was confined within the 155.900 and the 155.00 area, which was our key level. And of course, you know how we do this kind of setup. We wait patiently for price to either break out of the resistance line to give us buying ideas or break down the support line to give us selling ideas. And as at Tuesday, New York session Tuesday, we were able to execute a sell position after price broke down the 154. And I did tell you on Wednesday that I was not able to maximize this move as I placed my TP around the 153.700, giving me roughly 100 pips. Missed out on this one, and during our live session on Wednesday, for those of you who are with me, remember we spotted a simple trading setup on the 15-minute time frame. So I think I still have it here. So this was a structure we were looking at on Wednesday, where we had price go through a consolidation, and in fact, to join the downtrend move, we were looking at price breaking down both the 153.150 just right here, and of course to add more if price goes ahead to break down the 152.920. And look at what happened here. Price broke down the structure. For those who missed out on that opportunity, the market came back to retest it, and look at what happened. Price continued to nosedive. I had my TP target at the 152.00 mark, about 110 pips before this. Yesterday I didn't trade at all yesterday, so I missed out on all of this downtrend continuation. And for those of us who are part of this profitable journey, well done and kudos to you. Now, with the whole situation right now still looking bearish, so for those who still have a sell position, because some of us will still have sell positions opened, kindly move your stop losses. The 152 area seems most appropriate to move our stop losses to, as we begin to notice during the Asian session that it appears that the dollar is very cheap right now, and market participants are considering taking advantage of this cheaper US dollar against the Japanese yen. As you can see, we've been noticing some buy pressure here in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours. We've been noticing some buy pressure, and we don't know what these big players are hearing from the Labor Department as regards to the data coming in from the NFP today. And this is one of the signs that maybe the data is going to be coming in positive, and we're beginning to notice some positioning ahead of the NFP. Now, let's talk about what has been the major driver of the Japanese yen so far this week. We had senior Bank of Japan officials reaffirm plans to steadily raise borrowing costs, which definitely will support the Japanese yen, and of course narrow the rate differential between the Japan and the US central bank's assets, which is the US dollar. So if this narrative come to existence, it will further reduce that the differential between the US dollar and JPY, making the Japanese yen much more attractive for investors. Then we also saw a recent comment from Masaki, I'm not sure I get that name correctly, where he indicated that rate hikes will continue if inflation moves towards the 2% target, keeping the yen on the limelight. And of course, the rising real wage situation there has also increased by 0.6% in December, marking the second consecutive monthly gain. In fact, this is strengthening the case for the Bank of Japan, and not to talk of the Japan's 10-year bond yield, which is currently very attractive, and this has further reinforced support for the Japanese yen in recent times. So as a result of this, I'm beginning to think that the yen might continue the downtrend scenario. However, if we consider the yen will continue the upward trajectory. That is, the US dollar will continue to drop. So that is the implication here on the USDJPY chart. But however, I'm beginning to reconsider my position following what has been going on since the Asian session, where we've been seeing some deep buying activities around the US dollar. And when I look at my financial feeds, I notice some things that could also be of be a good news for buyers of the US dollar. We saw the US Treasury Secretary stated that the Trump administration isn't concerned about the Fed's rate trajectory, and this of course is going to be easing pressure on the US bond yield and potentially stabilizing the US dollar. And then we also have a cautious tone on inflation and labor market, where we saw speeches from Fed officials during the course of this week. We had Goolsbee, we had Logan, and I think we had two more other Fed officials who all acknowledge inflation's progress, but emphasize that the labor market remains strong, making immediate rate cuts less likely. And of course, this is definitely going to be a supporting factor for the US Treasury bond yield, which obviously will favor the USD at this point in time. So we cannot ignore the potentials that buyers can also come into this market at any point in time. Now that traders are patiently awaiting the U.S. non-farm payroll report, investors may be holding back on major bets ahead of the NFP release, which could lead to short-term USDJPY fluctuations. And of course, we have been noticing that in the last 5 hours. So if I zoom into the chart here, you will see that the market has been going through a consolidation ahead of the NFP, which for me is like a flag pattern, which is an uptrend continuation pattern if price action could break out of that resistant line at the 151.800 area. So I already have a buy position triggered on the USDJPY. I just want to risk small side of my positions and then have my stop loss anywhere below the 151.550 area to see what happens at this point in time. I'm a little bit biased to the bullish side based on what I've been noticing in the last 12 hours. However, if the market turns around and the 151.800 turns out to be a resistant point, I will be convinced to join a sell if price could break down the 151.200 area. So I would adjust this one 151.250, I guess. So I'm readjusting this one to 151.250. So if price can break down the 151.250, by the time price even breaks down that level, it will be back below that descending trend line, making it a beautiful opportunity to join the downtrend move. So that is the only condition here that will make me join a bearish move to the downside on this one. So in the meantime, I want to maintain a bullish bias. Even if this drops, this breakout retest could still happen, this trend line could still be a platform to send price to the upside. So maintaining a bullish bias at the moment, but will not ignore the potentials that sellers could come in, and we already marked out the 151.250 area as an area to look out for selling ideas today. So that is my simple view on the USDJPY for today's trading session. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5, 10, 15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned. All right. So let's move into the final asset on our watch list. Mark out those levels out on your charts. We have a range bound structure. Price is within the 151.8 and the 151.250. And I've said here that I'm maintaining a bullish bias after considering the character of price action in the last 8 hours, which further shows signs of market participants shifting momentum towards the US dollar as a result of cautious Fed tone from Fed officials and of course the US Treasury, which is of course going to be taking advantage of this one. So I wish us all the best of luck on the USDJPY. So the final asset we are looking at this morning is my favorite, and that is the XAUUSD, popularly known as the gold spot. And we saw the gold hit another all-time record high at the $2,883 level during the course of the week, making the gold another the spotlight for this trading week. And ever since price tested that all-time record, remember I mentioned that we are likely going to see choppy market conditions, consolidation phases, retracement move as those who are part of that bullish momentum will want to rush into the market to take some profit, as this is an unknown territory. It's an uncharted territory, and there is a likelihood that the fear of price crashing from here could grip the market. And you can see what has been going on in the last 24 to 36 hours. Price has been going through consolidation. Remember, we were buying this since the beginning of the week. Our first buy started at around the 2,790 right here, and ever since then we have been buying. Then there are situations during the course of the week where we sold as well. Remember, I updated us. For those of you who are part of my Telegram and TradingView platform, there are situations where I had a new trading setup. Okay, on Wednesday, we had a new trading setup right here. This was what we were looking at on Wednesday. We saw this whole structure happen. We had this range bound structure right above this trend line, making the idea of an uptrend still open for us. And you know how we use our trend lines. As long as price remains above them, we maintain a bullish bias. So we had multiple levels to maximize this uptrend move. We saw price come back to retest the 2,862 to trigger another buy position. Then we also added another buy at the breakout of the 2,870, as you will see here. And in fact, price moved over 190 pips on Wednesday for the first buy position and over 120 pips for the second buy. And I can remember updating updating us on my Telegram and TradingView platform when price got into the 2,880 that we may likely see a reversal anytime soon as a result of profit-taking activity, that we should move all stop losses and secure that position. And if you had done so, you must have been taken out with a significant amount of profit on the XAUUSD. And after I was taken out of this position, I didn't trade again. Neither did you see me do any update. And not until yesterday. I didn't plan trading yesterday, but after noticing some short-term trading opportunities on the 5 minutes time frame, I did. Okay, these are my entry points when I was scalping the market yesterday. So let me just close this one out. So I shared an update on the 5 minutes time frame yesterday. For those of you who saw it, so this was it right here. So I had this old structure which was looking like a bearish rectangle pattern. So we saw price drop and then went through a consolidation phase, as you will see here. And I was looking at joining the bearish move at the breakout of the 2,858, which I did. Before I uploaded this update, price had already triggered my sell stop order, and we saw price move about, how many pips was that? It moved about 90 to 100 pips before the bullish momentum came in, and since then I left the market. I left the market since then. I didn't trade the gold anymore. So today, what are the chances that we have on this commodity? Will this momentum continue to the upside, or are there any chances that price will continue this downtrend move? So that is what we want to look at this morning. And in fact, I do have a simple setup which reflects how market participants are digesting the recent development in the global financial landscape at this point. Now, the escalating tensions, escalating trade war tension is still very there between US and China. China has also imposed retaliatory tariffs on US goods following Trump's 10% levy on Chinese imports. And this, of course, fuels economic uncertainty, and it has continued to support safe haven buying of the gold commodity. Then the US dollar at the moment is still struggling to gain traction as market pricing 2 rate cuts by the Fed in 2025, and this is likely going to continue to support the gold commodity. And of course, the non-farm payroll 2 report coming up later today is also, though economists are expecting a 170,000 growth, but market participants still remain very cautious at this point, waiting for the data to come in before making any informed decision. However, the dollar still has its own potentials for today. We have the U.S. Treasury Secretary, who has stated that Trump's administration isn't particularly concerned about the Fed rate part, and this, of course, has shifted focus towards reducing the 10-year Treasury bond yield, which could limit the gold upside scenario. And of course, I want to maintain a balanced scenario here today. We've made profit on the gold commodity for this week, and we wouldn't want to just jump into any position around here today. In fact, I can stay out of the market today if I don't want to, because I'm already on the positive side for this week on the gold. There's nothing to really put myself under pressure anymore. But in the meantime, let's understand what the implication of the current market driver is saying on the chart. And if you look at what is going on here, it appears that buyers are gaining traction. Hold on a second, please. Hold on a second. I'm trying to. Okay. So if you look at the structure at the moment, it appears that buyers are gaining traction. Now, in the last, since yesterday, I think that's about 22 hours thereabouts, you can see the market has been on a downtrend after testing the 2,880 zone, which is a sign that sellers might have a chance at this particular point in time. And if price breaks out of that descending trend line, we will be willing to continue the uptrend scenario. So I have positioned myself around a range bound structure which has been formed in the last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. So we have price confined within the 2,689 and the 2,682, a $7 range bound structure where of course it's a reflection of how market participants are anticipating this upcoming event. So they want to wait for the data to come in before making any informed decision. So we are still going through a negotiation between buyers and sellers. Who's going to win this negotiation, we don't know. But from a technical standpoint, we want to see price either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, I already have my sell stop order below the 2,682 to capitalize on a bearish move to the downside if ever price breaks down the structure. In fact, if price breaks down to 2,682, we are going to be within seller's territory, which is further emphasized with this descending trend line you see here. And of course, it appears that my buy stop order at the 2,689 has been triggered, as you will see in the trading panel at the bottom of your screen. Price action appear to have broken out of the resistance line. So let's see how far this is going to go. And I'm yet to place my stop loss here. I think anywhere below the 2,608, below the descending trend line is looking promising. So I will just place my stop loss on that one just to protect any further risk on this one. So there we have it. And where will our TP target be on this one? Let me just extend this impulse leg here using my Fibonacci extension tool, and we shall be aiming at an area between the 127.2 and the 1618. So let me just put the 2885 here as my TP target, and if there is any potential along the path, then I could probably extend my TP. So at this point, we have a buy position triggered at the moment. Let's see how far this is going to go. Is it going to be a through breakout or a false breakout? So if we get taken out of that one, a breakdown of the 2,682 will be all we need to confirm the bearish move. And please note, there is always this question that people ask me, that once we mark out a structure like this scenario we have here, if price triggers a buy stop order, let's say just like it has done right now, if price triggers this buy stop order and we get stopped out in a loss, can we still enter that trade? The answer is a capital yes. We can still enter that trade. So if we get stopped out on this 2,689, maybe price hits our stop losses, the tendency for price to come back is still very there. It will just be a shakeout, and then price, if it goes back above the 2,689, is still very mature for us to buy. So I think I've answered that question. I usually get that message on my Telegram. So that answers that. So that is what we are looking at today on the gold commodity. It's a simple trading setup. We have a descending trend line in play, which will help us maintain the bearish momentum, while we also use it to guide our bullish perspective if price action breakout retest it. So that is my simple view here. I encourage you to mark it out on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So I think I made myself clear on the gold, right? If I didn't, or you need some further clarifications, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there's any questions before we start rounding off on today's Forex Morning Mastery. So guys, if you have found this content helpful and useful, kindly click on that thumbs up button, click on the like button. It goes a long way in supporting this channel and this community to grow, and it also inspires me to continue to do more. Let's make the number of likes tally with the number of people on board. Some of us are yet to click on that like button. Please do, and thank you very much as you do so. So it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. It has been a beautiful week so far for us, monitoring 3 financial instruments. We did very well on the USOILSPOT, the USDJPY, and of course the XAUUSD. And well done and kudos to everyone who had stayed faithful with our analytical approach. So today we were able to revisit these assets, see how well they are doing, and of course prepare ourselves for today's trading session by marking out simple trading setups to help us navigate the current market dynamic. So I hope you all mark out the structures on your chart. If you did, well done, kudos to you. So all we need to do is exercise patience and allow the structures to mature. And for those who joined us for the first time, I hope you are able to gain 1 or 2 things during the course of the session. If you did, you want to be part of our subsequent editions. The next one is on Monday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review the market as usual and of course prepare for the new week. So till then, I wish you a wonderful evening and of course a happy weekend. Do have a wonderful evening, everyone. Bye.